Hey everyone, Apple reported fiscal year 2024 first quarter earnings results that had investors thinking, meh. And so in this video, I'm going to review Apple's earnings results, look at what investors liked and what they didn't like, and update my recommendation of Apple stock. Coming into this quarterly update, I had Apple stock rated as a buy, but just barely above the borderline of a buy and a hold. So you're going to want to tune in to see if I'm changing that recommendation. So let's jump into these financial results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the good news is that Apple increased sales. After several quarters of declining year-over-year sales, Apple's total net sales increased to 119.575 billion, up from 117 billion in the same quarter the prior year. And this was driven by increases in its services segment, which grew to 23.1 billion, up from 20.766 billion in the same quarter the prior year. This is important for Apple because Apple's services segment is nearly twice as profitable as its hardware segment, its product segment. And you can see here, Apple breaks down revenue, products and sales, and then cost of sales, product and services. You can see here, services cost of sales 6.28 billion compared to revenue of 23.1 billion, whereas products were revenue of 96.4 billion on cost of sales of 58 billion. So you can see the percentage wise, products are higher cost of goods sold compared to service side, and that makes sense, right? Apple, if you buy Apple Music subscription or Apple TV Plus, Apple doesn't need to spend that much more money for that next incremental customer. Whereas when you purchase that next iPhone or that next iMac computer, there's significant cost of goods associated with that computer, with that iPad, with those headphones, and on, right? So that's why investors have been cheering Apple's growth in the services segment. That being said, Apple can't just continue to grow the services segment. It's the products that drive services growth. If you don't have an iPhone, you're less likely to buy services from Apple. You're less likely to spend money in the App Store. So it's the sales of the products that drive sales of the services. You can't have one without the other, or you can't have one without the other in the long term. Temporarily, you can have quarters like this one where services growth outpaces significantly product growth, but longer term, the two go hand in hand. That solid increase in Apple's services segment drove increase in operating income to 40.373 billion, up from 36 billion from the same quarter the prior year. So roughly 10-12% growth in operating income. That's a solid growth in operating income for Apple in an otherwise mediocre quarter where top line growth didn't increase by all that much. So the category that really struggled for Apple is Greater China. Sales decreased by more than 3 billion from 23.9 billion down to 20.8 billion. And I'm seeing this across the board with several of the companies that I follow that have a strong presence in China, notably Starbucks, Nike, and now Apple reporting sales that were not great in Greater China. So investors are looking at this segment and thinking, could 2024 be better? Or is the 2023 declines going to continue in 2024? We've all heard the news coming out of China where growth in that region is not as strong and decelerating now coming out of the pandemic, especially now being hurt as people are spending less money on goods, more money on services, onshoring supply chains. It's all been roughly bad for the China region, and companies that operate in China are seeing the growth decrease or decelerate or worsen as a result. Additionally, some good news for Apple. iPhone sales increased meaningfully to 69.7 billion, up from 65.7 billion in the same quarter the prior year. I already talked a little bit about how critical product segment is for Apple in driving services growth. the iPhone is the head honcho here. You can see across the board in terms of products, no category even approaches the iPhone at 69.7 billion. The next is services at 23 billion, which is just 1/3 of the amount. Now, in this quarter in particular, the iPhone is really pronounced. The difference in iPhone sales is really pronounced because this was the holiday quarter for Apple, the time period where people buy more products and less services proportionally. So that is making this a little more skewed than usual. Still, I don't want to underplay the importance of the iPhone for Apple. It's the center of the ecosystem. It's what gets people into the Apple ecosystem. And once you buy an iPhone, you're likely to buy other category products from Apple, like an Apple Watch, like Apple Music, Apple TV Plus. Maybe you get Apple Care. Maybe you get the headphones. Maybe you get more and more Apple products. If you already own an iPhone, all of those other products are more enhanced. They work better if you have an iPhone. So it's great news for Apple stock investors to see the iPhone segment revenue jump by 4 billion in the quarter. And in more good news, cash flow from operations increased to 39.895 billion in the quarter, up from 34 billion in the same quarter the prior year. 5.9 billion in growth in cash flow from operations, nearly 40 billion in cash flow from operations for Apple, demonstrating again just how lucrative this business model is in generating profitability, in generating cash flow. Overall, solid quarter from Apple in demonstrating the execution of the business, in demonstrating how skillful Apple is at operating the business. Top line, however, slow growth, demonstrating that customers are maybe growing tired of Apple's products. Maybe Apple needs more of a refresh, maybe more innovation. The Apple Vision Pro headset is now launching sales in the US. Hopefully that could drive growth. Remains to be seen. And then a little bit concerning is the decrease in the Greater China region. That was formerly a great growth category for Apple, and now it's decreasing. That's not really good. And then competition is rising there with lower cost phones, perhaps taking some market share on top of the slower growth in the economy. So there was some pros and cons with the current quarter. It wasn't all bad news. It wasn't all great news. I can understand why investors and the market reacted with meh, let's see what's going forward here. And the stock price kind of stayed flat, was down a little bit following these earnings results. So as far as my recommendation, I had Apple stock rated as a buy, barely above the borderline of a buy and a hold, because the valuation is not cheap and the prospects are not great. However, the company is an excellent profit generating machine. Cash flow continues to grow. Profits continue to grow as the company refreshes the cycle. So I'm keeping Apple stock barely above that borderline as rated a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.